From the Fed meeting to Mag 7 earnings, it's a big week for markets. Mike Mussio of FBB Capital Partners is here to discuss it all. Okay, Mike, we have the Fed policy meeting this week. It's the first one since President Trump made a pretty unusual visit to Fed Chair Jerome Powell last week. The Fed is expected to keep interest rates unchanged, despite lots of criticism from Trump. But what will you be looking for and listening for specifically in the Fed statement and in Powell's comments?
Yeah, so the meeting was interesting, right? It was in Powell's home court, but President Trump is the real estate developer, so maybe neutral grounds there last week. But this week we're expecting more of the same from the Federal Reserve Chairman, and more of the same in the wake of that from President Trump. So we're not expecting a rate cut. We are expecting or laying the groundwork for maybe some dissent in terms of the voting for a cut this go around, but unlikely to see a change this month with an indication that they are watching the data, which we get some additional data this week, both on PCE and which covers inflation, and then the labor market as well, which are the two things that they're trying to manage at the Federal Reserve. So setting up for some kind of move probably in September. That's the expectation.
So you mentioned the data this week, the inflation report, and Friday is the jobs report. How much is riding on that, those two key reports? Because we saw the PCE last time drift a little bit further away from the Fed's goal of 2%.
Yeah, so any move further away from 2% would actually support the Federal Reserve that they're not moving in terms of lowering rates, that the inflation hasn't been licked quite yet. And anything that's moving in the opposite direction toward 2%, that probably favors President Trump's argument that rates should be moving lower. We shouldn't be behind the curve, which is his big critique of the Fed. On the labor front, expectations are still like upper 100, almost 200,000 jobs for the month of July. Again, like if you're the Federal Reserve and kind of full employment, low or lower or kind of trending inflation, they've got enough of a backstop here to be in the same position they've been in all year, which is we're just going to wait and see. And the economy keeps surprising, I would argue, to the upside. Almost 4 months now removed from Liberation Day. Very few people in the marketplace on that 20% almost correction from February peaks to early April would have expected us to be sitting here 4 months later at up almost double digits in U.S. markets, and that's where we are. So investors are kind of looking through this a little bit. They don't want to be caught short or not fully invested in an environment where the market may rip another 10 or 15% higher. And so that's the conundrum that's at play right now.
Well, the Magnificent Seven big tech stocks have still been largely driving this market, and four of them report this week. How much is riding on those earnings, and what will you be looking for?
Yeah, so expectations around where these companies are coming in terms of capital expenditures is going to be interesting to hear. Is that continuing apace? Also, what these companies are doing or saying about their own adoption in terms of not just investment in, but adoption of AI, and if that is starting to impact their labor force, within their companies, that will be interesting to hear. And then estimates as we get on into the third quarter about what the back half of the year and even 2026 is going to look like. So a lot of attention being paid still to these companies, and they comprise not just a large part of the market cap, but a large part of the earnings share of the broader market. So everyone will be listening the next couple afternoons as they report.
So when we do look at those companies this week, specifically we have Meta and Microsoft on Wednesday, and we have Amazon and Apple on Thursday. Any one of those in particular that you're really going to be drilling down on?
Yeah, we think Apple has a little bit more to prove in terms of the numbers. The stock has lagged this year, the broader group and the market, by the way. It's a widely held stock. It's moved between number 2 or 3 in terms of position right now in the S&P 500. So it's a driver, but it's been a detractor in the market and in the space. And of those companies, really the only hardware company of the group. So it'll be interesting to see what they say about the product cycle, what they're seeing in terms of any impact on tariffs anywhere around the globe for them. So that's what we'll be paying attention to with Apple.